How to trade correlated pairs. That is exactly what we will be speaking about in this video because it's a very important topic that I get asked a lot, and it can completely mess up your risk management if you don't do it correctly. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms daily. And I suggest you watch the video until the end because it will be filled with value, and I will also show you a live market situation in which we can be looking for a capitalizing opportunity. And I will see you in the video. Okay, so what I want to speak about in this video is, first of all, currency correlation, so what it is and how you're supposed to be approaching correlated pairs. And then I also want to give you a full breakdown of the situation that we currently have on AUD USD, because it's a very interesting pair to follow at the moment for a potential trading opportunity. So by the end of the video, if you stick up to the end of the video, you will see exactly which is the best zone for a potential trading opportunity at the moment on AUD USD. But first of all, let's speak about currency correlation. Now, the first thing that you have to understand about correlation is how do you actually know if two pairs are correlated or not? Well, to know if a pair is correlated with another or not, there are two main ways to actually go for this. Number one, if you have two pairs that have the same currency inside of them, then probably they will be correlated. So let's take, for example, GBP USD and Euro USD. Now, these two pairs both have the USD inside of them. So obviously they are correlated, meaning that if the USD, for example, is getting stronger, then GBP USD will be moving to the downside, and Euro USD will be doing the same thing. It will be moving to the downside because the USD is getting very strong. However, this is kind of a general rule, okay? Most of the times, this is how it goes. However, even if the USD is getting very strong, okay? If, for example, the GBP is more or less not being that strong, then obviously GBP USD will be moving to the downside. But at the same time, if the Euro is getting stronger than the USD, even if GBP USD is going to the downside, then Euro USD anyway will not be moving to the downside. Euro USD will be either ranging or it will be actually moving to the upside if the Euro is stronger than the USD. So knowing that two pairs have the same currency inside of them does not always mean that they are correlated. At least in a general sense, yes, they are always correlated, but in some specific periods, for example, some months, they might not actually correlate at all, okay? Because, for example, if Euro is getting very strong, then even if the USD is getting strong as well, if the Euro is stronger than the USD, Euro USD is moving to the upside, but at the same time, GBP USD is moving to the downside. So in a general sense, this is a rule that you can use. If you have two pairs with the same currency inside of them, they are correlated. However, there is even a better way to understand if two pairs are correlating at the moment, which is basically literally the simplest thing to do. Just look at the charts. You split the screens. For example, you take Euro USD on one side, you take GBP USD on the other side, and then what you do, you go on the daily chart of both, and you literally see, are they moving in the same way? Okay, so let's see if they're moving in the same way. Let's start from here. You can see that you can follow my vertical line both on the left and on the right side. It moves the same. And as you can see, here the market is going up on Euro USD and it's going up on GBP USD. Here the market made the retracement, and it made the retracement exactly at the same zone also here. Then the market started making the move to the upside, and GBP USD started making the move to the upside. Here Euro USD started a pullback, and here GBP USD started a pullback. So are they correlating at the moment? Absolutely yes. They're moving almost in the exact same way. So at the moment, GBP USD and Euro USD are correlating, okay? So these are the two ways in which you can understand currency correlation, if two pairs are actually correlated. Now that you know how to understand if two pairs are correlated, what do you actually do with this information? Why did I speak about correlation in the first place? Because I see many people that take the same trades on correlated pairs or even opposite trades, okay? and they're not hedging. They simply don't know that the pairs are correlated. But now you know how to identify if two pairs are correlated. Now, if you're taking a long on GBP USD, okay, let's say here you're taking a long on GBP USD and on Euro USD, and here you're taking the exact same long also on GBP USD. Okay, now in this case everything is perfect because you have created profit on Euro USD and you have also made profit on GBP USD, right? However, was it smart to actually take a long both on Euro USD and on GBP USD? It was not smart. Why? Because both pairs move in the exact same way. So if they move in the exact same way, if this pair will be a winner, if this trade will be a winner, then also this trade will be a winner. And if this trade will actually be a loser, also this trade will be a loser. This is what has the highest probability of happening, that the two trades will have the same outcome. So what does it mean? It means that actually, if let's say, for example, usually you risk 1% per trade, if you lose 1% here, you will also lose 1% here. Meaning that basically without even knowing it, you have doubled your risk. Because actually this is not a 1% risk trade, it's a 2% risk trade. Because if you lose one, you will lose also the other one. So basically you doubled your risk without even noticing, which is a very bad thing because it is messing out your risk management. Now, there are two main ways to avoid this, okay? Number one, you just select of the two pairs the one that has the best confluence, meaning that has the best probability of actually playing out. You can check, for example, the order flow, see which of the two has been longed the best by banks, which one has been longed more by banks. You can check technical reasons for which one trade is better than the other one, and you take the one that has the best confluence. But there is also another way to go for this, which is basically risking 0.5% on this one and 0.5% on this one if usually you risk 1%, meaning that basically you split your usual risk per trade between the two trades. These are basically the two main things that I wanted to speak about at the beginning of the video. So how to know if pairs are correlated and how to treat the correlation of pairs. Now that we have spoken about this, let's go and see what we have on AUD USD and let's make a full breakdown on the pair. Just a quick reminder, make sure you comment below and you let me know which topic or pair you would like me to cover or analyze in the next video. So starting from the weekly time frame, on the monthly we don't have anything. There is nothing really interesting on the monthly that we have to say about AUD USD. The only thing that we can kind of say is that at the moment the market is at this trend line, but this trend line is not even being confirmed because we only have two touches, so nothing really interesting on the monthly time frame. Let's start our analysis from the weekly, okay? Now on the weekly time frame, what do we have? We have a market that clearly has just completed an impulse correction and impulse pattern to the upside. So the market on the weekly has just created a higher high. And if the market creates a higher high, what do we expect? Specifically, if the market in creating the higher high has broken above a quite strong level of structure, we can expect the market to go and retest that structure. So in this case, in creating this higher high, the market has broken above this structure level, which was the structure resistance here, again, structure resistance here, preceding all this move to the downside, and the market has now broken this level to the upside. So all the resistance that we had at this level is now turned support here, and we have quite strong liquidity at this area that we can expect the market to want to go and test before the continuation to the upside. Going down on the daily time frame, what we can see. Now on the daily time frame, we can see that the market has just created a quite nice bearish pattern. Why has the market created a bearish pattern? Because look at what the market did. First of all, after creating the weekly higher high that we have just seen, the market has created this impulse correction pattern. And after this impulse and correction, what did we want to see? We wanted to see the continuation to the upside. Specifically, if we take our Fibonacci from the low to the high of the impulse, what we can see? We can see that the market had retraced exactly to the 50% retracement of the Fibonacci taken on the impulse, and we expected the continuation to the upside from this level. Specifically, we had an upside target at which level? As we always say, if you want information on a retracement in the market, what do you have to do? You have to take your Fibonacci on the impulse. But if you want information on the next impulse, what do you have to do? Take your Fibonacci on the retracement. And you will have an upside target at the minus 27 of the Fibonacci taken on the retracement, which is exactly the level that the market went to test before starting this move to the downside. So everything on the daily time frame has played out exactly as we wanted to see. Impulse correction and impulse to test the minus 27. And in fact, with students, we were able to capitalize on this move to the upside on AUD USD for a very nice 1 to 3 risk to reward on the trade. So very good risk to reward on AUD USD and beautiful trade to the upside that we were able to capitalize on with students. And after the market hit our target, the market just melted to the downside, which is the reason for which we have a target at the minus 27, because it's the level that most of the times the market will reject. And after that, what did the market do? The market broke all structure back to the downside. So basically we have up, down, higher high, equal low. Up, down, higher high, equal low. After this, what do you expect? You expect a retracement and the continuation to the downside. So basically the creation of this head and shoulder. So overall, what we want to see here at the moment is the market go and test the level that we have already identified on the weekly, rejecting this daily resistance. Because if you remember, as we said on the weekly, we want to see the market reach this zone, right? This downside target. Let's put it green and let's make it visible also from a daily perspective. Perfect. We go down on the daily and we can see that this is our downside target, because on the weekly, we have just seen that the market wants to go and test this level to grab some liquidity. So on the daily, we have this bearish pattern. And on the weekly, we want to see the market go and grab some liquidity here. So can we expect this bearish pattern to play out? Absolutely yes. Now, before I show you how we will be approaching this situation with students, let's go and give a quick check at what we have from a COT perspective, so commitment of traders, what the biggest banks and institutions are currently doing on AUD USD. Now, if we go and get our data for the AUD, what we can see that hedge funds, so the biggest speculators in the market, were aggressively longing AUD USD. We went from minus 54k net positions all the way up to plus 4.2k net positions. So clearly longs were increasing from 21k to 45k and net positions just going from negative to positive. So clearly the long exposure, as we can see here, went all the way up to 42.5%. So could we expect the continuation to the upside for this impulse correction and impulse? Absolutely yes. This was great confirmation that with students, we definitely wanted to long AUD USD for this nice trade that we took, and we capitalized on the move because we knew that institutions were buying AUD USD. And after the market now has broken to the downside, what we can see that with the last report, institutions added 5.4k short positions. And net positions went again to the negative side. So again, from positive, shifted back to negative. So institutions currently have more shorts than longs on AUD, with 47k shorts and 42k longs. So everything at the moment seems quite good for this move to the downside. However, as usual, trading is reactive. It is not predictive. And even if we want to see the market make this move to the downside, doesn't mean that we can just take the short. We need to see proper confirmations. And as usual, the monthly, weekly, and the daily timeframes are the best timeframes when it comes to the direction of the market, obviously combined with the COT data. However, the best time frame for the entry is the 4-hour time frame. So what we will be doing with students, we will be monitoring price action on the 4-hour time frame inside of this area, waiting for the market to shift from a bullish market as it is right now, because at the moment everything is bullish, to a bearish market. And only after the market inside of this area, and only after the market inside of this area will shift from a bullish to a bearish market, and only if the market will actually do it, because we don't have any confirmations at the moment, okay? Everything is still too premature, but inside of the zone, if the market will shift from a bullish to a bearish market, at that point we will add AUD USD to our watch list, and as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and for the market to complete the bearish pattern on the daily, so this nice head and shoulders, and for the market to go and test the weekly support that we have already identified from a weekly perspective. If you enjoyed the video, make sure you smash that like button and comment below really does support the creation of more free analysis and education for all of you. Also, make sure you go and check out the mentorship program. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. In fact, I give you a new daily market breakdown showing you exactly how to apply these strategies with the entry, stop, and take profit, as well as answering every single question that you have every day. So I really suggest that you go and check it out, or you can go and check out the next video.